What is the principal challenge facing Finance Minister Nirmala Sitharaman in this budget year? Nilkant Mishra, why don't you kick that off? I'll get each of you to get 90 seconds to tell us, if you were Finance Minister, what would you see as your principal challenge 2 days out from the big budget?
So there is significant slack in the economy. So the very fact that the core inflation indicators are showing such low measures, and we have the economy significantly below the pre-pandemic path, suggests that there is space for the government to stimulate. But at the same time, I think it's important to make a choice between fiscal and monetary. The biggest challenge, I think, for the government right now is that it has chosen the path of fiscal conservatism, which I think is the right one. It is likely to stick to the debt to GDP path that it has guided to, 50% at the central level till FY31. But this is not reflecting in lower yields. So if the government borrows less, that should mean that the cost of borrowing in the economy should come down. There are clearly transmission issues. Some of them lie at the door of the RBI, but I think there are many challenges in front of the government as well. I think yeah, go ahead.
No, before I go to my next, just to, do you believe that maintaining the FY26 fiscal deficit at 4.4% amidst mounting infrastructure, welfare, defense expenditure post Operation Sindhu, do you believe that that will be met? Are you confident of that? Or is that a big challenge?
Look, there has been some tax slippage. I would say that there is potentially some slippage of 60,000-70,000 crores, which is give or take about 0.1, 0.2% of GDP, 0.2% of GDP. But that, given the significant cash balance which is accumulating, I don't think should be difficult to finance. But I think the challenge is not this year. The challenge is what happens next year. And more importantly, what happens in FY28 when the pay commission hit comes to the government, and how they manage to retain the path to 50% debt to GDP. But I think the immediate challenge is much bigger, which is that despite this fiscal consolidation, despite this remarkable fiscal discipline, the cost of money in India, the cost of capital, is not falling as sharply as it should.
Okay, I'll get you to expand on that later. But Sajid, Chinoy, what do you believe is the principal challenge facing Finance Minister Sitharaman?
Good evening, Rajdeep. I think the principal challenge is the global backdrop against which this budget is being held. I think these are truly extraordinary times. There's a certain global order that we've come to expect over the last 80 years, which is unraveling and unraveling rapidly. This has two implications. In the near term, this is leading to a lot of financial instability globally. You've seen gold prices at record highs. People don't know if there's a risk-free asset that you can consider risk-free in the world anymore. Concerns about dollar debasement. Now, in that environment, the typical reaction for emerging markets like India is to hunker down. When there's global instability, be conservative, reduce your fiscal deficit, create buffers. But what's unique about this global environment is also one where, the law of the jungle has begun to prevail, and economic heft really matters for global leverage. And that would argue to go in the other direction, to be adventurous, to push on the reform pedal. So I think the challenge that is unique this time is you've got one set of forces arguing for conservatism. There's another set of forces arguing for being adventurous. And I think the way to, bring this together is I think the fiscal deficit will be conservative on the math. I think deficits will go down to reassure investors that India's macro fundamentals remain very stable. But I think this year's budget is to be not the numbers, but what happens in the budget speech. And we use the budget speech to inject much needed reforms or a continuation of the reforms in the last 6 months, and you exhibit your adventurism over there. So I think that's the balance. How do you simultaneously be conservative on the fiscal math, but be adventurous on the reform front? So you're telling people that, we're going to push hard on the growth ladder, but we're not going to do it at the risk of macroeconomic instability. It's that balance, I think, that is going to be crucial in this budget.
We'll come to specific reforms also later on the roundtable. But Pranjal, Bhandari, your view, what do you see as the principal challenge facing Finance Minister Nirmala Sitharaman?
Yes, thank you very much, Rajdeep. I think there are two challenges. One is uncertain growth, and the other is a weakening currency. Now, on uncertain growth, last 12 months, the growth numbers have been very good, but we can't take this for granted because a lot of one-time good things happened. For example, after a long time, there were good rains. Suddenly, oil prices fell, which is good for the economy in terms of growth. Then we had inflation falling, so the central bank could cut rates. We had all of those tax cuts, GST and personal income tax. We had enough to get us good growth numbers. But the efficacy of all of this could start to decline as we get into 2026 or FY27. And what will drive growth then in a global environment that remains uncertain? I think that's sort of like the number one challenge for the finance minister at this point of time. We can get into what I think is the right thing to do right now, but mostly I would agree with the previous speakers that it's a combination of restraint. Don't become too adventurous on the fiscal part or on the monetary policy part, and stick on with a lot of the reforms. I just want to make one point here that this is not a T20 moment. It's like playing a test match. We don't have to hit a 6 in every ball. The scoreboard doesn't really have to look exciting at the end of every over, because I think that's how we really win this one. So we have to really get into these important reforms which get us good, meaningful, medium-term growth. And we can speak a little bit later about both external and domestic reforms. Quickly, I wanted to talk.
In fact, that's my next question. What are the key reforms going to be? I'll come to that. But I like the T20 analogy with test matches, because remember, we are not a very good test match team at the moment. We are a brilliant T20 team. So in a strange way, with the T20 World Cup coming up in a week's time, you're telling us the finance minister should not be looking to hit the ball out of the park on day one. You're asking this to be a budget for the next 2-3 years. Am I broadly correct? Or set the direction for the next 2-3 years?
Yes, exactly. Yes.
Okay. Soumya Kanti Ghosh, your first reactions. What do you believe is the principal challenge facing Finance Minister Sitharaman?
Yeah, thank you, Rajdeep, for having me on the show. I think the budget, the primary challenge the finance minister is facing is the extraordinary global situation. I think we are living in a fragmented world, and you don't know what is going to happen today or even tomorrow. Every day the policy is changing, and that is actually creating a lot of pressure on the external environment. So when you are so that is the first thing. The second thing is that in that context, it is also creating a lot of pressure on macro variables like the rupee, the interest rate, and other factors. The third thing is that in this era of significant policy uncertainty, where you don't know what is going to happen tomorrow, you don't know whether the trade deal with the US is going to materialize, it is better that we stick to the basic principles of economics in the budget. We stick to the fiscal path, because we have has been one of the few countries which have charted a very conservative fiscal deficit target after the pandemic, and which has paid dividends to us in terms of a low inflation. And the second thing we need to do is basically do some of the reforms, continue on the reforms path. We have done a lot of reforms in the last year in terms of the macro reforms. Right now, maybe it may be the time to do some of the micro reforms, which could actually give dividends. So in my sense, I think there is nothing to do any extraordinary, but just stick on the basics and on the path of consolidation. And I think that will pay you dividend.
Nainalal Kidwai, principal challenge from an industry perspective facing the finance minister. We've seen in the economic survey itself questions being raised as to why is private investment not doing more despite all the concessions and benefits that they've got. Is that a big challenge? How do you get private investment? Net FDI is another challenge. Are those issues that you believe the finance minister will have to address, create a climate where people feel a bit more confident about investing in India?
Raj, you're absolutely right. In fact, for a FICCI confidence survey which was just conducted, the three things that industry CEOs put right on top were job creation as number one, capital expenditure, to your point, and the third was export. So all three, to my mind, given the finance minister has always heard and understood what industry wants and requires, have got to be on her mind. So the job creation, I think, becomes critical in light of tariffs, which have impacted high job-intensive sectors like apparel, leather, diamonds, and therefore how we help those industries through these times, but also look at intensive job creation industries, so manufacturing to a lesser extent maybe, but the service sector, tourism, must figure in terms of the job creation element. On your point on capital expenditure, that is directly related to demand. And the GST cuts are reflective in terms of seeing that demand go up. Capacity utilizations have risen to about 75%. The sweet spot is typically around 80%. When the sweet spot, I mean that as capacity utilizations go north of 80%, industry begins to look at investing in more capital expenditure. So it's directly related to demand for goods, and that can come both from domestic demand, which the GST cuts have helped, but also from exports. And that leads me to the third point that industry CEOs had pointed out, which is exports. What we can and need to do to drive exports comes from making sure that we have cost-competitive industries. So that's every factor of production: cost of capital, cost of land, cost of electricity, cost of logistics on the one hand. And on the other, the schemes that we have dedicated ourselves to, the PLI schemes, I believe SEZs are very critical going forward. And given the success of the electronics industry, one of the asks from FICCI has been, let's look at a large-scale electronics park on the style of Shenzhen, on the style of what Vietnam has created, where the supply chain, including the OEMs, the manufacturers, all come in under one roof, and we provide the support of infrastructure and ease of doing business within these limits, and push for exports in areas like electronics, where we've already seen some success.
Nilesh Shah, as I said, I'm going to conclude with you, Nilesh, on this, on the first question, which is the principal challenge facing the finance minister. You track the markets very closely. What is the market expecting?
I don't know about market, but let me put my expectation. India historically is known as Sone ki Chidiya, but our present situation is more like Kasturi Mrug. Like Kasturi Mrug. We get about 2% of GDP by way of foreign direct investment. On a net basis, that amount is almost negligible. About 150% of our GDP is lying in precious metal. Majority of that is locked in Tijori parallel economy. I really want finance minister to think out of box and bring the savings which is locked in the Tijori into the bazaar. That can raise tax revenue for the government, which will allow them to spend money on capital expenditure and infrastructure. It will also put money in the pockets of entrepreneurs. They will be able to spend, or they'll be able to invest. At one shot, we will be able to unlock our frozen savings and benefit economy from a growth point of view. Finance minister has trinity of impossible in front of her. Keep on spending money on capital expenditure because private investment is subdued. Yet maintain the path of fiscal prudence because you have promised to bring down debt to GDP ratio to 50% by FY31. And this can be achieved by raising non-tax revenue, asset monetization, divestment, or converting Kasturi Mrug to Sone ki Chidiya.
I like the Sone ke Chidiya analogy as well.